Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, December 21st, 2012. And in this video, I'd like to do an overview of the Russell 2000. I'll take a look at the sectors real quick, at the sector itself, and then dig into a few of the components. I have quite a few trades, either active trades on the site right now, and quite a few recently completed trades. So I already have a lot of charts marked up on some of the small cap stocks, and we'll talk on those briefly today. What prompted me to do this video is I actually in the last couple days I've had several emails from traders who share in my overall bearish bias, but we're concerned about the recent strength in the Russell. You know, the Russell's been doing quite strong. It's been quite strong lately, doing well, and I wanted to talk on that real quick before we dig into the charts here. First off, keep in mind that the Russell 2000, small cap stocks in general, are much more volatile, or they're higher. They have a higher beta when benchmarked against the larger indices, like the S&P 500, which are the 500 largest companies in the U.S. The Russell 2000 is actually a compilation of 2,000 small cap companies. So smaller companies tend to be higher beta plays, and although they're over time, the correlations between the larger caps can change a little bit. What you typically get is when the market is going up, let's say the market is going up X percent, small caps are going to be going up X plus percent, a little bit more. 10% bounce in the broad market will probably give you a 12-15% bounce in the Russell. And it works the other way as well on the downside. When the market corrects, you tend to see the small caps fall harder because they are higher risk, higher beta plays. So where I'm going with that, it's not any surprise, at least to me, that the small caps have been very strong on the recent market bounce since the lows put in back about a month or so ago. So with that being said, let's go ahead and dig into the charts. Take a look here. We're looking at a weekly time frame on the Russell 2000, and as you can see from this horizontal line, here are the highs back in 2007 at the peak of the last bull market, and this line has just been tremendous resistance for the Russell. You can actually, I put a yellow line here, I'll extend that, well, no need to extend that left. We have a few in the last couple years, we have had a few pierces above that, the 2007 highs, and again you see here back in 2008. So there's 1, 2, if you follow my cursor, 3, 4, almost 5, 6, and now 7 attempts at that line. So as far as resistance levels go, that one is about as solid as you get. Obviously, a solid sustained break above that level would be bullish longer term, but as I've talked so much on lately, this is what I look at, these divergences down below that keep me bearish. We have prices making equal highs with the MACD making lower highs, and the RSI as well, so that is negative divergence. And negative divergence can manifest in a few ways. You can have prices making higher highs against your oscillators and indicators making a series of lower highs. You can also have flatline divergence where prices make higher highs and the indicators make equal peaks. Or in other words, if they're not making higher highs as well. So in this case, this is negative divergence, and like I said, we're on our 7th attempt here. And until that level is broken, it has to be respected as a key resistance level. So, my trading style, I tend to short resistance and buy, short moves up to resistance and buy pullbacks to support, unless the charts are looking to me like that resistance level will be taken out. Then that's where I'll look at a long setup. I'll wait for a break of resistance. But again, how you determine which way to play it is largely, there are a lot of things that go into it, but divergences, the oscillators, indicators down below, fundamentals, price action, volume, market breadth, all types of things go into that consideration, and that's why for this point, at least I still maintain an overall bearish bias and think that we're probably going down from here. So that's the weekly chart. There's what it looks like. As you can see, we had this uptrend line here that generated off these lows back in 2011, and pretty well-defined uptrend line, solid breakdown, and as I discussed in the video yesterday, nothing but a retest. Let's take a look at the daily chart, and you can see it here clearly. Again, these are the October lows, 2011. Very nice, clean uptrend line, and we had a breakdown here, and up until this point, at least as of yesterday or the day before, I think maybe Wednesday, we had a retest, as well as yesterday again, and so far prices have turned back down off that level. So to me, that's bearish. Now this is another line to keep an eye on. This was a downtrend line off the highs back in 2011 as well, and that was a bullish breakout. Proved to be a bull trap because prices fell back below it, and now we're above that once again. I personally put more stock into this uptrend line, but this is a level to watch if the Russell does pull back. Let's see what it does around here. Let's see if it can hold that level again, or if it keeps going down. Go ahead and take a quick look at a 60-minute chart, and a lot like the SPY or the S&P 500 chart that I've been showing recently on the 60-minute, what we had here off the lows back in November 16th lows, we've had a bearish rising wedge pattern build in the Russell. We had negative divergence, or flatline divergence in this case, same difference. Prices making a series of higher highs against the MACD, which actually, if you look here, this is where the divergence was really clear when you had this peak right here. But either way, prices did go on to make another high. That's why I've extended these lines. And so from this peak in prices to this higher peak, we did not have the MACD nor the RSI make a higher high. So negative divergence, and this is simply nothing but a breakdown of a rising wedge and a retest up at this point. Now where we go from here, I wouldn't want to see a retest go much higher. In other words, this line goes up indefinitely. If you want to extend that line, it'll go forever. And at some point, you have to say, well, this is more than a retest. If we were to, we broke down here, that's a pretty extended retest, but yet that's what it is. Now, if prices were to turn down and go back up again, at that point, I would disregard this wedge pattern, and more than likely you'll have these divergences burn through as well. So something to keep an eye on. Now, one of the features I really like with this TC2000 charting program is the ability to drill down on the individual components in any sector or ETF. So with a click of a button, it brings up all 2,000 stocks. Now, I'm not going to go through 2,000 stocks today. Let's put this over here. Let's shrink it down a bit. I do have quite a few. I use this flagging system for any stocks that I'm actively trading or following. So right now it opened up the list of the 2,000 components with the stocks that I have annotations and notes on, and we'll start there and we'll run through this real quickly and just take a look. And the reason I do this is it's one thing to look at a chart on a sector or an index and determine a bullish or bearish bias, but there are times where the charts are a little ambiguous. So at that point, I like to drill down and take a look at some of the components. And for those of you who have followed the site, you'll know I often do that. I have a watch list with the top 25 holdings in the S&P 500. I have a watch list with the top 10 holdings in the NASDAQ 100, and so I'll very often take a look at those top heavy-weighted components in order to give me a little bit more heads up on the charts on those individual stocks, and that might give you an idea of what the broad market or that individual index is likely to do. So we're looking here, WNR. I cannot recall if I've posted this one on the site or not, but this one is getting a little bit long in the tooth here on this rally. It's been heading in an uptrend since looks like December, late November of 2011, and as you can see below on the RSI and MACD, we now have some pretty clear negative divergences in place, and so this one's getting a little extended, and obviously a break of this uptrend line here, which is really the bottom of this wedge type pattern it's now forming, that would trigger a either a sell signal. So anybody long in the stock, that would be your signal to exit on a break of this line. And anybody looking to short the stock, of course, that would be another signal as well. GCO, this one we did have on the site recently, earlier in the year at least, broke down this long-standing channel. We can zoom out here a little bit farther in time, and you can see that we did have a breakdown. If memory serves me correct, I had pointed out S1 is a support level. We might catch support. I did expect that level to go. However, we had a pretty substantial bounce. Prices came all the way back up here and have since turned down and are now below that support level. So again, this is another component of the Russell 2000, and that is definitely a bearish looking chart to me now that we're below that support level. And again, when we go back farther in time, we broke this multi-year uptrend line here recently. So that's 2 for 2 as far as stocks that are looking bearish in the Russell 2000. ACI Arch Coal, this one was a long trade on the site recently on a break above this downtrend line. We went up, we took out resistance, we did fall just shy of my first target. Prices since pulled back, had pretty much a retest of this downtrend line and have pushed back up to that resistance level that I had pointed out before and have since again turned down. So there were strong positive divergences in place, but this one just hasn't been able to get going. I wouldn't short it. I have no position and no interest in being in this stock right now, long or short, but one to watch. KBH Homes, nice breakdown of this trend line, very impulsive move. Prices pushed back up, and that's a very steep trend line, so we didn't get a full retest of it, as you can see. But prices have since turned back down pretty sharply, failing to take out that prior reaction high. So overall, that's a bearish chart in my opinion. And as long as prices do remain under that level, call it 1735-ish, maybe give it a percent or two as a margin of error, that is a bearish chart. NTRI, this one I may add on the site. This has been a long-standing. I just noticed the other day it's been in the trade setups for a long time, and I had mentioned that as a short on a break below this line, which we did get, and I was looking for a weekly close below that level. Knowing the stock and what happened since I put it on earlier in the year, we had several intra-week, in other words, daily closes below, but the first weekly breakdown, if I'm not mistaken, was around this level. So that one, for those of you who caught it, I never did move it to the active trades, but it has met the criteria and technically should be an active short. Personally, I didn't get it either. I didn't have an alarm set on it, and that's why I didn't bring it up. I didn't mention the breakdown on the site. However, I did start a small short position yesterday myself. I just scaled in. It was at the top of this bear flag pattern. This looks like a textbook bear flag, and this stock, Nutrisystems, has pretty much, as I noted back on the original chart, what I call an abyss on the volume at price histogram, meaning there is virtually, you can see these histogram bars up here, most of the trades, or I should say all of the trades in the last, going back to 2005, happened above this line, and even those trades before, very little volume there. So this stock has virtually no support below. It is well below that trend line that I was focusing on. The horizontal support level, and seems to be setting up in a textbook bear flag pattern. This would be your pole, pretty much the drop from here. And so if this pattern were to break down, if this trend line goes, you would pretty much add the length of this pole to the point that it broke down to get your target. So I won't add to that position unless it goes breaks down from this trend line. And personally, my stop, if it gets much above this level, I'll give it a little bit of room because I took a small position, and maybe the 850 level, somewhere around there. Next up, Mountain Gaming, MNTG. This was another active or recently completed short on the site. I believe that we shorted this one here. I was watching this uptrend line, and the short entry should have been on a break of that line. I believe you can check all these trades on the site. It's easy to pull up trades, former trades by the symbol. and that one hit T3 to the penny. This is technical analysis. I mean, hit it perfectly, and I was in this one. I remember covering my position at T3. Prices bounce all the way back up to the first target, which, remember, broken support then becomes resistance. Prices stopped there and turned back down, again going past T3, and now we're pushing up back towards this former second target level. And I don't have much of an opinion. I wouldn't recommend this one long or short right now, but it looks like a broken chart to me. And overall, let's just say neutral on that to slightly bearish. FCH, believe this is still an active trade on the site. Broke down on this rising wedge pattern. We pushed back up, made a retest, and have pulled down. We missed T1 by just a hair, hitting the first target. Prices have since pushed back up, but overall, I think there's more downside to come on that stock, and hard to say whether I favor T1 or T2 or not. Don't have too much of an opinion on it at this time. I think there's some better fish to fry out there, but if I'm not mistaken, that one is still on as an active trade. PCYC, that was a recent short. Actually, I've been in and out of this stock personally so many times in the last few months, I can't remember which trades I've added officially on this site, but you can see here we had a breakdown of this small wedge pattern up here. Here's another key trend line which prices recently broke down. We did hit the first target. I remember posting that, and prices have since pushed back up a little bit above this resistance level, seem to be turning back down now. This stock had some pretty steep divergences in place at the highs, which lead me to believe that there is ultimately more downside on this stock. This looks like a topping stock, in my opinion, more so than a strong stock in a consolidation pattern. So a break below this T1 support level, and especially below this trend line, which is the second target, that would more than likely lead to additional downside on the stock. Zoma, I believe an active trade on the stock. We shorted here. This has been my target. If memory serves me correct, I added this or mentioned it again as a nice add-on when it pushed back up to this resistance line. That was just a few weeks ago, and it has since turned back down, so doing real well. Anybody who either took this trade initially or added on here at the resistance level, and 227 remains my target on that trade, so another bearish looking component of the Russell 2000. Medco, another recent short on the site. This one was a short after a breakdown of this large rising wedge pattern. Negative divergences were in place. Went on to hit the second target. Since bounced up back, struggled with that former first target, and which was resistance at the time. Yesterday, I think it was, had a nice funky gap up. I don't know what the news was on that. The stock has been stalling out since. Overall, at this point, I wouldn't recommend to enter this stock. If you still have it, if you took the trade, I'll try to revisit this chart, but I wouldn't want to see it get a whole lot above, really much above where it popped up to yesterday if you're still in the trade. So maybe set a stop a little bit above yesterday's highs around the 24.55 area. Jout, I've had this one on for ages. I personally own some of this in some IRAs. I like the fundamentals on this one, and here's a long-term uptrend line. We need to keep an eye on this, and as I mentioned, I was looking for a weekly close on this above this weekly uptrend line. We've had a few pierces above. We haven't had a solid close there yet, so this one has some potential, especially if the market holds up going forward. HL, this is a mining company. This was on as a long earlier in the year on the site. I put it on as a long and a break above this downtrend line, and if memory serves me correct, I pulled the trade early and took my own profits, either one of these earlier targets, but these were, if you can see through here, I had listed 4 targets on the trade originally, and I think I even mentioned, somebody might, if you were more bullish on the sector you might want to hold on. As you can see, that stock had a huge move. I mean, the breakout was down here around the $4.5, $4.75 level, and that stock went all the way up to my fourth and final target, which is around 670, and has since pulled back down. So and that was HL. Overall, the gold stocks and the miners have been getting beat up lately, and I wouldn't recommend being long or short this stock. I just wanted to point out the action. You know, it was setting up in a potential bull flag pattern here, which never played out. That broke to the downside. So overall, that's a bit bearish. When you see, you know, what looks like a bullish pattern, traders are expecting an upside break, and instead you have the pattern break the other way. Overall, I'd say that's bearish. And again, I'm doing this to get an overall feel for the Russell 2000 by looking at these individual stocks. Overstock, OSTK, a recent short idea posted on the site. I spent a lot of time discussing the weekly chart. That you can take a look at the chart on the site. I don't have the mock-ups on this weekly chart here, but Overstock, you know, was overbought, very overbought, and I mentioned how all these overbought readings on the RSI have led to substantial and sharp corrections, trend reversals in the stock, and that's where we're at today. And you know, I personally took a starter position up here, and I think a break under the support level, which, as you can see today, the stock is down nice, down 5.5%, right at that key support level. So just like the broad markets, I think we're flirting with critical support right now in the broad markets, and Overstock as well. So a break of this support level and let's say a close on the daily chart below that level, a solid close below, would be the next sell signal. OMX, this was a recent long on the site. I think we closed this one for about a 20% gain. Took it on a breakout of this level here. It ripped up, hit my first target, actually the second target. We gapped up above the second target, so closed that trade at that point. And since then, if you take a look at this orange line here, you're looking at a much higher high in prices, a very steep increase from this previous reaction high to this high here, against a flat to slightly downsloping MACD and RSI. So you had pretty steep negative divergence in here, coupled with the fact you hit my second and final target. I think this is a bearish looking stock. We had the bull flag pattern play out pretty much to projection, maybe a little shy, but either way, I think this stock is very overbought in the short term. Well, I don't think that's, you know, clear here as evidenced by the RSI, very overbought. But I do think that the stock is due for at least a pullback to this first target area, somewhere in there. Maybe it wants to fill this gap right here down to about the 870 area, but either way, another stock. And as we can see here, it's starting to slip back below that T2 level. So another bearish looking small cap stock. CTRN, again another trade on the site not too long ago, a long side trade. That was a break on this falling wedge pattern, a break below this uptrend line here. Went on to hit the first target, pulled back a little bit, stayed above the breakout point, and went on, made a perfect, near perfect kiss of the third target level, and you know, that for quite a substantial gain. It broke out around $10. And that third target level was 1465, somewhere in there, 1470, and we even got a little bit above that, and then fell back, and the trade was stopped out. I believe I removed it since then. Where we're at now, hard to tell. It's sort of been chopping around in between these target zones. You know, came back, hit this first target, which is support, a couple times. And now it's dancing between T1 and T2, so I don't have much of an opinion on that one from here. HOV, this is a home builder, Hovanian, and as you can see, nice negative divergence in place here on this recent push up on the highs. We have this channel, could extend that a little bit. The yellow lines look like a rising or ascending channel, and a break below this uptrend line here, or the bottom of the channel, would most likely propel prices down to my first target around 410, second target 340. So this is a long setup with divergences in place. An aggressive trader might want to take a shot here at the top. Now that those divergences are, you know, in place, wouldn't surprise me for at the very least to see a pullback to the bottom of this channel. Now, that's not a very large percentage move, so you might consider going for the whole trade down to T1 and put a partial position on right now with stops not too far above, and then add to that position on a break of the uptrend line. STC, this one was also a trade earlier in the year, short on a break of this uptrend line, and we fell short. We played out for some nice gains, but we never hit the first target. Found support here, came back, found support at that level again, and has since had a very strong move up, and a break below this trend line would more than likely trigger a sell signal. So as long as it remains above this uptrend line, this stock is in an uptrend, a confirmed uptrend. However, it is challenging that line right now, so something to keep an eye on. Men's Warehouse, this is an active short setup on the site. We're looking now at 2-day period chart. Very nice looking head and shoulders pattern here. Again, you can reference the notes and charts on this, but being the fact that we're in the process of putting in that right shoulder now, and prices do continue to move down, makes me believe that's an overall bearish chart. IMGN, also another recent trade on the site. We had a fake down here and then the actual breakdown right here. Prices fell very sharply and came just shy of my first target and have since put in a bounce, still above that breakdown level. Zooming out longer term, here's the pattern, and as you can see, this we've had this clear impulsive breakdown. You can see the negative divergences that were in place below on that large wedge type pattern, and in my opinion, this stock has some more downside to come for these divergences to play out. VLCCF, Knightsbridge Tankers, shipping stock. Had this one, I believe I put it on a long on the site, and we had a breakout here which turned out to be a fake out. Prices broke above this downtrend line and fell back below, stopping the trade out. These shippers just can't seem to get going. So overall, this stock is in a downtrend until proven otherwise, until we see this uptrend line clearly get taken out. There were divergences in place on that downtrend line. There continues to be. You can see the RSI, MACD continue to move up here. RSI is making higher lows, but for now the stock is in a downtrend, and until that technical evidence shows us otherwise, that's what it is. Recent or an active short on the site, breakdown of this blue trend line, prices pushed back up, made a retest. It's not shown here. Let me add the divergence. If you look at the trend line up top, prices making a series of higher highs with the MACD making a series of lower highs, as well as the RSI as well. So another stock that looks like it's playing out on the short side, giving us a tough time lately because of course the market's put in a pretty sharp bounce in the last over the last month or so. But overall, I believe these divergences have more to play out on the downside, and this remains my first and second target on that stock, so an overall bearish looking chart. PCYC, Piper Jaffray, another short, hit the first target here, was a breakdown of this line, this trend line, and we hit the first target, and first and only target, and since that stock has gone on, moved up pretty sharply. It looks, right now it's in a strong uptrend, you can't argue that. I probably put a trend line in here to keep an eye on, and sooner or later I'm sure this one will have a pullback and probably break below this trend line. A little bit of a divergence. If I look here, the MACD seems to be lagging. I'm about equal peaks on the RSI against prices moving up, so I would say this one's getting a little bit extended, a little long in the tooth here. RGR, another recently completed short trade on the site, broke down. If I remember right, this was the entry here on this key uptrend line. Prices broke down, hit the first target, so that was a nice, quick, profitable trade on Ruger. Prices then bounced, went above the resistance level taken, stopping the trade out. So we never did make it down to the second target, which would be, as you can see, there's a yellow trend line that comes back Sometimes these trend lines get moved around here on TC2000 for whatever reason. So there's that second trend line. Hard to say. You know, the gun stocks have been very strong lately, and who knows? Now we have the legislation. They're going to bounce around, try to figure out what to do about all these crazy public shootings that we've had lately. So I would stay clear of the gun stocks. First Solar, that's an active long on the site, and I think we're basing that one off the 4-hour chart. Actually, no, we've already hit the second target on the 4-hour chart. I've also shown a daily chart. The stock has been strong. I've been long this one a couple times throughout the year, and we've had some very successful trades with First Solar, and now we're above the 200-day moving average. I like to see these moving averages curling up, which they are. All in all, this looks like a bullish stock to me. So if you're long in that, maybe set your stops, adjust them, maybe not too far above this second target on the daily, or not too far below, I should say, this T2 on the daily chart. And longer term traders might want to hold out for that final target up here at T4. And that's about it, folks. The rest of these I don't have marked up. So those were the stocks of the Russell 2000 that I had notes and charts on. And as you can see, overall, the majority of the stocks in there, at least the ones that I'm tracking, look bearish to me. Hope you enjoyed the video. Have a nice weekend.